Ladies and gentlemen, good day and welcome to SRF Limited Q1 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kumar Saumya from Ambit Capital. Thank you, and over to you, sir.
Thank you, Amshad. Good afternoon, everyone, and thank you for joining us today. We at Ambit Capital are pleased to host SRF Limited's Q1 FY26 results conference call. We have with us today Mr. Rahul Jain, President and CFO of SRF Limited. I would now like to invite Mrs. Nikita Dhawan, Head of Corporate Communications at SRF, to initiate the proceedings for the result conference call. Over to you, ma'am. Thank you.
Good afternoon, everyone, and thank you for joining us on SRF Limited's Q1 Financial Year 26 results conference call. We will begin this call with brief opening remarks from our President and CFO, Mr. Rahul Jain, following which we will open the forum for an interactive question and answer session. Before we begin this call, I would like to point out that some statements made in this call may be forward-looking, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would now like to invite Mr. Jain to make his opening remarks.
Good afternoon, everyone. I extend a warm welcome to you all and thank you for joining us today for SRF's Q1 FY26 earnings conference call. I trust all of you have had the opportunity to go through our results and presentation shared with you earlier. I will begin the call by briefly taking you through the key financial and operational highlights for the period under review, following which we will open the forum for a Q&A session. We started the year on a positive note, delivering strong performance across our key business segments despite prevailing global uncertainties. With expectations of an improving external environment, we remain cautiously optimistic about achieving stronger performance in FY26 as a whole. In Q1 FY26, our gross operating revenue stood at 3,819 crore and EBIT was up 43%, recorded at 694 crore, reflecting an 18.2% margin. Profit after tax grew 71% YOY to rupees 432 crore. During the quarter, board also approved an interim dividend of rupees 4 per share with a total outflow of approximately rupees 119 crore. Our chemicals business reported revenues of 1,839 crore, registering a 24% year-on-year growth. The operating profit of chemicals business increased 64% from 306 crore in CPLY to 503 crore in Q1 FY26. The specialty chemical business segment delivered strong revenue and margin performance driven by a healthy demand for newly launched products. We are now witnessing a gradual recovery in the agrochemicals market post-inventory rationalization that happened during FY24 and FY25. While there are still some overhang of the inventory cycle, we believe majority of the same is now behind us. Albeit, some pricing pressures remain, and we continue to witness the same in some of our products. During the quarter, key milestones included a launch of new pharma intermediate and registration of an AI product, both of which are expected to scale up in FY26. In an environment of evolving market dynamics, Chinese competition, and uncertain tariff position, operational efficiency remained a key focus for the segment, supported by cost optimization, process improvements, automations, and better asset utilization. Demand for agrochemical intermediates remained favorable, with strategic pricing and solid export performance contributing to overall growth. To support future demand, the board approved a 250 crore investment for a new agrochemical intermediate facility at the Dahej, reinforcing SRF's commitment to long-term sustainable growth. The fluorochemical business delivered good growth compared to corresponding period last year. While the overall domestic market remained weak, with RAC production being lower, we were able to find countermeasures in the export market and grow our HFC volumes when compared to corresponding period last year. A key highlight in the segment was SRF's commercial sale of R467A in Q1 FY26. Developed and patented in-house by SRF's R&D team, R467A is a low GWP, non-toxic refrigerant gas designed for retrofitting legacy R22 stationary air conditioning systems. It has also earned Global ASHRAE certification, making SRF the first Indian company to achieve this milestone. SRF maintained its leadership in both room AC and mobile AC segments in the domestic market. The recently operational HF3 plant is helping increase HFC production, and PTFE segment is preparing to expand sales for its free flow and fine cut variants in FY26. The chloromethane segment also delivered stable results, with pricing largely remaining range bound. A lot of questions around quota regime for HFCs have been received since our results announcement and in the past as well. We will plan a separate call to explain deeper nuances around the same. However, I would like to clarify that the quota policy is extremely clear, and we believe that someone putting up large capacities has incorrect understanding of its implications. SRF's R&D capabilities remain a core strength, supporting innovation and competitiveness across fluorochemicals and specialty chemicals. With over 400 skilled professionals, our R&D team is engaged in developing complex chemistries and advanced products. SRF has built a strong intellectual property portfolio with 153 granted patents and 494 process patents filed. Moving forward, R&D will remain central to advancing process development, scale-up, and commercialization across agrochemicals, pharmaceuticals, and next-gen refrigerant gases. The performance films and foil business recorded a 6% YOY revenue growth in Q1 FY26, reaching rupees 1,418 crore, with operating profit increasing 62% over CPLY to reach 140 crore in Q1 FY26 on account of record production, improved efficiency, and higher capacity utilization and overall margins. Volumes of BOPP were higher and margins improved on the back of better overall realization, higher VAP sales, and disciplined cost control. South Africa remained stable, and Hungary benefited from lower energy costs and higher exports to mainland Europe. While our Thailand unit did face margin pressure due to high costs and competition from China. The aluminium foil business delivered its best ever quarterly sales, driven by higher volumes and supportive trade measures on the notified anti-dumping duty. The current BOPP demand-supply situation is likely to remain favorable in the domestic market, given known market developments. In the performance film and foil business, we remain focused on profitability by commercializing new VAPs and accelerating sales of high-impact VAPs. To support future growth, the board approved a rupees 490 crore capex investment in a BOPP film facility in Indore, equipped with a 10.4 meter wide Bruckner line and metallizer. The project is expected to be completed in 24 months, further strengthening SRF's leadership in high-performance sustainable packaging films. Our technical textiles business recorded rupees 467 crore in revenue during Q1 FY26. Weak domestic demand of nylon tire cord fabric and pricing pressure in belting fabrics due to Chinese competition impacted the business performance. However, higher exports in belting fabrics and healthy sales in polyester tire cord fabric helped offset some of the challenges. While NTCF volumes improved sequentially, they remained below last year's levels. Ongoing capex of the new dipping machine and ramp-up of recently commissioned belting fabric lines positions the business for future growth with continued focus on high-margin value-added products. In other segment, we saw muted performance with coated and laminated fabrics facing soft demand. However, coated fabrics retained its domestic leadership, with monsoon demand expected to boost growth. Production capability and operational efficiency improved through installation of new looms. Despite industry overcapacity, laminated fabrics maintained price leadership, and upcoming equipment additions will further enhance in-house production capabilities. Sequentially, our overall interest cost has also witnessed some softening as both global and local interest rate benchmarks were on a downward trend and is likely to impact our cost of borrowing in FY26 positively. I am happy to share that during the quarter, SRF was honored with 2 prestigious awards reflecting our commitment to quality and social impact. The fluorochemicals business received the Zero PPM Award from Toyota Kirloskar Motor Private Limited for flawless performance, while the SRF Foundation earned the CSR Times Gold Award 2025 for its rural education program in Mewat. During the quarter, our CSR wing SRF Foundation undertook transformative initiatives around our manufacturing locations, empowering close to 2,500 students in Bhind via a digital bus, training 100 plus educators in tech, upgrading classrooms for 140 children in Nambampatti, distributing medical equipment to 12 sub-health centers in Dhar, and delivering mobile healthcare across 15 villages in Bharuch. In conclusion, we have had a solid start to the year, supported by steady performance and continued momentum across key segments. Our commitment to capital expenditure remains robust, with planned investments of around 2,400 to 2,500 crores during this fiscal year. The recent announcements reflect our confidence in business and its long-term potential. SRF has built a strong, diversified foundation that enables us to adapt to evolving market conditions and pursue growth opportunities with agility. While certain sectors may face near-term headwinds, our overall outlook remains positive, and we are firmly focused on delivering sustainable, long-term value through innovation, strategic initiatives, and operational excellence. On that note, I conclude my remarks and would be glad to discuss any questions, comments, or suggestions that you may have. I would now like to ask the moderator to open the line for the Q&A session. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitesh Dhoot from Anand Rathi Institutional Equities. Please go ahead.
Good afternoon. Thanks for the question. My first question is on the agrochemicals of 250 crores. That's for 12,000 metric tons. So assuming 1.0 tons there, this appears to be a sub $3 product. Can you give some color, if it's an existing product or a new product, and if you could also clarify any particular reason for capex in lower value products?
Okay, Nitesh, the way we are looking at it, while the 12,000 is a rated capacity, the way we are looking at it, it is also to think about the capex from the capacity will actually depend on the base product mix. As you keep going up the value chain and keep doing differentiated products, that is something that we believe we needed to do. So therefore, while 12,000 may be a nameplate rated capacity, which is a requirement to be given, the idea here is to not set this up as just that product. It is a requirement for a very large product. Again, the assumption of 1:1 may not be correct on this side, and therefore we believe this sets up the foundation for the future for us.
Right, but is this an existing product or is it a new product completely?
For us, it is a new product completely. We have not done this in the past.
Okay. Sir, secondly, on the capacity utilization in R32, I mean, what's the current capacity exit rate for?
Sorry, your voice is cracking. Could you repeat? Nitesh, your voice is cracking. Could you repeat, please?
Can you know?
No, not very well.
Sorry to interrupt, sir, but I may request you to rejoin the question queue if you are not.
Just one moment. Sir, is it any better now? I've just tried to adjust.
Yes, sir.
Yeah, much better. Please go on.
Yeah. Okay. So, so I was asking on the capacity utilization, the current capacity utilization in R32, and what will be the likely exit rate for FY26? And, if you could give some outlook on the R32 prices. What we hear from the channel is that, there has been some softening in prices in the domestic market. If you could just, give some color there.
So, two or three questions together, Nitesh. The first one about capacity. Our current capacity utilization is pretty much as the rated capacity that we have on 32. So that's effectively full capacity utilization. Again, from an FY26 exit perspective, our target is to continue this at that level, right? So, that's the position on it. From a pricing perspective, you have to also understand that pricing of this is also a function of the current demand and supply. There is always a seasonality that prevails within the 32 or HFC position overall. So, and again, that is your channel check in terms of what the pricing is, either lower or higher. We believe that the pricing is strong, and given overall market conditions, it is likely to remain that way. That's what we believe. Nitesh?
Sure. Thank you. So just one last question on packaging films. The typical equipment ordering, ordering to plant commercialization would typically be, around 24 months, right? So, but are there any other faster routes, also maybe alternate vendors, asking this in context of the recent supply disruption that happened in the industry? Also if you've seen any increase on the BOPP import side since the incident.
So two things, Nitesh. I think the performance films and aluminum foil business, and specifically BOPP segment in that, the supply situation, what you are saying is right? But there are no other routes. You will have to buy the machinery from the two global suppliers on it. If it is BOPET or BOPP, there are two large global suppliers, being Bruckner and Dornier on it. So that's how it works out. No shortcuts around it. That's one element of it. With respect to the second question was with respect to the overall situation in terms of the supply on BOPP. Yes, it remains tight. India will be short from an overall perspective. The incident that happened is roughly about 25% of the India, let's say, production capacity. So India will be short, and therefore there will be a need for some imports as well.
Thank you, Rahulji. That's all from my side. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Arjun Khanna from Kotak Mutual Fund. Please go ahead.
Sir, thank you for taking my question and congratulations for a great set of numbers. Sir, I have two questions. The first question is on the N2, N3 regulation for the MHCV side. We have referred to that in a market trends part of it. In terms of 134A, my understanding is we are the sole HFC manufacturer of this gas in India. A, is this correct? And what would our market share be at this point in time?
See, again, I think to a certain extent, from an HFC perspective, overall market share is roughly in the range of 60 to 70% from a domestic market perspective. Balance gets imported from a 134A perspective. There are a couple of new capacities that have started on 32, but on 134A, you are right, we are the sole manufacturers.
Sure. And just in terms of pricing, while you did allude to R32, given with this regulation, do you see a step up in terms of demand? And since it's already in the system now, are we seeing benefits from the same?
I think that demand kicks in from 26 onwards rather than now. Roughly speaking, I would say it should start to see demand positive in 26 only, not in the current year, from a 134A perspective.
Okay, sure. Fair. The second one is on the PTFE and the aluminum foil. So these have been recent projects by us. We were expecting a ramp up in FY26. If you could comment on both of them, please.
On the aluminum foil, Arjun, I think we kind of said in the release as well that the ADD that has been levied for 5 years is a positive. We are starting to see traction on that side in the domestic market. Our overall goal here is to continue to grow the market and to increase our production on the aluminum foil side. PTFE also, we believe there will be some positives in the overall FY26 perspective from PTFE. Global sales, free flow, fine cut should take up a better position going forward.
We were earlier talking about exports also of aluminum foils. We haven't seen much in export data. So is this something that will happen maybe in the second half of the year, or we are now concentrating post the ADD on the domestic market?
No, there are US and European customers that have been identified. Some of the sampling will start happening, and hopefully some of that traction we should see in FY26 itself.
Just on this, what utilization levels are we currently at for both PTFE and aluminum foil? Yes, sir. Aluminum foil, we will roughly be, I would say, at about 50-60%. PTFE also in similar ranges. Sure. Wishing you all the best. Thank you. Thank you, Arjun.
Thank you. The next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
Yeah, hello. So in specialty chemical, when we talk about healthy revenue growth, so is it because of the newly launched product, or majorly contributed by newly launched product, or existing product is also driving growth?
So again, when you think about FY26, Q1 FY26, yes, I would say attribute a larger growth into the newly launched product. But I think when you compare it to CPLY, where we were seeing a bit of depression from a overall inventory cycle that we have spoken about, we've kind of seen some of the older products or some of the legacy products also go up in volumes. Although in some cases we've seen, let's say, pricing to be slightly lower. The point also is that some of these products, we are saying that we will ensure that our market share remains positive and continue to find answers to, let's say, some of the pricing pressure that's there.
And considering a current scenario, can we assume chemical business, what margin we have shown in Q1, it is going to continue in Q2?
Look, I've always looked at it from an annual margin perspective, Sumant. You are aware of that, right?
Okay.
Again, quarter-on-quarter margin may not be the right way to look at it, and therefore we will continue to be on the same position on that side, Sumant. I don't think we want to look at quarter-on-quarter margins.
Okay. And any change in chemical business growth guidance for the year?
I think we've done fairly well in Q1 when you think about it. Why should there be a change? You want a higher change or a lower change?
Higher.
So you will always want a higher one, but I'm saying we are still sticking to the original guidance.
Okay. Thank you, Ram.
Thank you. The next question is from the line of Jason Soans from IDBI Capital. Please go ahead.
Yes, sir. Thanks for taking my question. So, sir, just in terms of the ref gas pricing, of course, it has helped us this quarter. And roughly speaking, R32 quarter-on-quarter has increased by around 20%. That's what we've come to. That's what the pricing increase reflects. Now, just wanted to understand, you have also mentioned in your presentation that domestic market was weak. So could you give us some color in terms of how this has panned out, just roughly ballpark in terms of volume or price, how the performance has been so strong in terms of the fluorochemicals business? And also a related thing is, do you think this pricing will be sustainable going ahead?
Look, I would really say two things here, Jason. The fact is that there has been a positive in ref gas pricing. I don't want to put a number of 20% or 25 or 30% around it from a domestic and an export market perspective. I can only give you color in terms of saying that the pricing has been positive, right? The other thing in terms of overall, let's say, market situation, RAC production is known data that it has been weak. And that's why we have been saying that the overall RAC production, when we think about it, has been lower than when we compare it to CPLY. Right? So that's how we are looking at it. We've been able to find some countermeasures and continue to utilize our capacity to the maximum possible. The second question I kind of forgot. Could you repeat?
So just wanted to know, do you think this pricing trajectory, do you expect this to continue going ahead? The strong pricing trajectory in ref gas?
way you want to look at it is the global pricing on this. I think there are various positions in terms of where China is, where overall capacity positions are playing out. We do believe that the pricing should remain strong, but again, there could be changes in overall demand from a world market perspective, although we don't see that happening.
Okay. Sure, sir. And so my next question, I just wanted to know the progress on the various AIs under development under the specialty chemical segment.
Going on, I think there are a few that are under, let's say, campaign positions. Hopefully, some of that ramp up will get seen in FY26. But there are larger products that we are talking to and are in various stages of development in the AI phase.
Okay. Okay. And so just wanted to know, I mean, of course, it's a well-known fact that last quarter, one major competitor witnessed a major fire in that must have positively impacted our performance films business. Just wanted to understand how much of a positive impact was there, and how much do you think it is sustainable going ahead?
Again, two things. We are all aware of what is happening in the market, right? There has been that incident that has caused. There is a positive in terms of the fact that BOPP demand and supply situation has kind of got changed because of that. But frankly speaking, I would say that to be able to quantify it is very difficult.
Sure, sir. Thanks. Those were all my questions. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, please limit your questions to 2 per participant. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah. Good afternoon, sir. Sanjesh here.
Sanjesh.
Yeah, good afternoon, sir. First, on the specialty side, you mentioned that there was some strategic pricing action that has been taken. And in the initial remark, you said that there were pricing pressure. In a scenario of pricing pressure, when you say strategic pricing, you're talking of upward revision. Now, what's transpiring is there certain...
That's your assumption, Sanjesh. What we are saying here is that in certain cases, in certain products, we are not willing to let our market share go. We are working on cost positions. We are working on our overall, utilization of the product, and therefore want to continue it like that. We are not saying that we have taken certain strategic pricing decisions upwards or downwards. We are just saying that we want to look at some of the products as one of the largest products that we have and continue, gaining market share around it.
Okay. Got it. That's clear. Second, on the R32, you said that India market was weak, but we, as a countermeasure, found some market in the exports. Which are the markets which are showing traction for R32 for us?
I don't want to go into positions for various other export regions. I'm saying overall exports were higher from a volumetric perspective, and it could be to the US market, it could be to the Middle East and Southeast Asia markets. But overall is where we are at. I'm not talking about various jurisdictions or geographies here.
Okay, same geography, but more volume is what you are telling.
I have not said any of that. Interpretation at your end.
One last question from my end before I get back into the queue. For the specialty, what we are hearing commentary from the global agrochemical is sort of slightly weakish from earlier. Are you seeing that trend in your discussion with the customer? Because the customer, ones who are listed large agrochemical companies, have been downward revising their guidance. Anything that we have picked in our discussions?
And I think our order book is in fairly good position, Sanjesh. There could be various positions that some of the global majors have, and therefore, from their overall perspective, they are looking at probably a slightly negative outlook. I don't think we are in a situation where we are saying that there is a negative outlook on our end as well. I think we continue to stick to our overall guidance here.
Got it. So we stick to the thing we said earlier, that last quarter we said that 60-70% of our order book is already booked. So that gives us a confidence of growth, and we stick to that point.
Correct.
Got it. Thanks, Rahul sir, for answering all those questions, and best of luck for the coming quarters.
Thank you. The next question is from the line of Naushad Chaudhary from Aditya Birla Mutual Fund. Please go ahead.
Thank you. Congrats on a good set of numbers. Two, three quick clarification. First, you touched upon R467, which is our in-house developed baby. Just wanted to understand the current revenue size, and can this really be big for us in the future? In next 4 or 5 years, can this
Look,
be
Naushad, I can't give you revenue by gas, right? Overall, HFC positions were higher. That's all that I can tell you. But gas by gas, I don't either give revenue or volumes. But yes, given the fact that this is a replacement and for 22, we certainly believe that, let's say, for a 5 to 10 year period, this could play out as a large positive.
Sure. Second, on the fresh land acquisition, similar or larger size of compared to the hedge, any development there or anything if you would like to touch upon?
So I can only say there is work going on that side. Hopefully, there should be something that comes through in the near future. Once there is an announcement around it, you will certainly come to know. But as of now, I can only tell you work going on.
And last, on the packaging business side, despite marginal revenue growth, we have seen a good margin jump sequentially and year-on-year as well. And historically...
No, I didn't catch the question. Repeat, please.
On the packaging business side, despite marginal revenue growth, we have seen a decent jump on the margin side. But historically, it has been on an average 14-15% margin business. Last 2-3 years was in a problem. Do you think the cycle has bottomed out and we should quickly go back to the normalized on that at least?
Look, again, I think you are well aware, probably better than I am, in terms of the current market situation on what has happened to one of the market participants on it. I think given the situation, the supply-demand situation has completely twisted on its head on BOPP. Hopefully that can sustain over a period of time because capacities don't come up quickly. It will take time. As to probably someone else had asked a question in terms of saying, can there be a shorter route to get these capacities online? To which I said it's practically impossible.
Sure. Should this lead to the normalized average margin of the packaging business versus what we are today?
Look, very, very difficult to be able to say marginal increase or more increase. So again, it will depend on the demand and supply situation only.
Sure, sir. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. There is a comment wherein we highlight that, the stricter registration norms are delaying some bit of product launches from the innovators. Is this comment in general?
The keyword there is someone.
Yeah, correct. So just wanted, your clarification here. Is this referring to some of our AIs that we are making, or it is a general comment for the industry at large?
It's more a general comment, but yeah, to a certain extent, dovetails into the AI position as well.
Okay. But as you mentioned, your 20% growth guidance, remains intact, which factors in such delays or maybe the pricing-led, strategic initiatives which we had highlighted there. Will that be the right statement?
I would say that the way we are looking at it, Ankur, is the fact that we are still very confident that we will be able to get there. There may be some delays, but given all of this current situation prevailing, we are fairly confident whether AI or non-AI, we should be able to get that number.
Great, sir. Secondly, the new pharma intermediate that we had announced, and I'm going back to our earlier comment wherein we had expected the pharma business to grow at a much faster pace. Will this be a bigger driver for that ramp up, or this is, how should one look at the new launches on the pharma side there?
Again, the way we are looking at it, Ankur, is that pharma intermediates, agrochemical products, all of these will continue to come through, right? When we say we have launched the new product, doesn't mean that the commercial scale quantities have started to flow through. It's now been approved. as the customer needs get more stable, we will continue to sell the product is the way we think about it.
Great, sir. And just lastly, on the fluoropolymer side, any timelines you'd like to share from a ramp-up perspective, given that we are almost 50-60% utilization?
You're talking about PTFE.
PTFE, correct.
Yeah, again, I think FY26 should be a better year than FY25 for the PTFE segment overall.
So should we expect, let's say, full ramp-up by the end of this year, let's say Q4 at an exit run rate? Or it may take slightly longer?
About 75-80% exit FY26.
Okay. Fair enough, sir. That's it from my side. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Abhijit Akella from Kotak Securities. Please go ahead.
Yeah, good afternoon and thank you. Just one question on the refrigerant side, Rahulji. For R32, what would our estimate of total world demand be at this point in time? And if you have a forecast for the next 5 years, by 2030 or so, that would be great to have as well. And also, how much might China production be at present for the product? Thank you.
Sorry, Abhijit, I don't have that data available readily. I will probably relook at the position on this and maybe come back to you separately on this. I don't have that both those data points available readily.
Sure, that's fine. Thank you. And maybe just one other thing then. You did mention at the close of your opening remarks that some businesses could see some near-term pressures. So if you could please just specify, which areas you might be seeing that in.
See, again, that's a more generic comment, Abhijit. I think we are facing some, let's say, pressures on the technical textile front, given where demand is, given where the overall position is. So that's something that is there. But overall, I don't see a negativity around it. I think our commitment to CapEx has been strong. We are continuing to put in more money on the CapEx. Some headwinds will always be there. Business is not linear. It will continue to evolve over a period of time. So I think that was a more generic comment rather than a specific comment, Abhijit.
Okay, got it. Thank you so much, sir. All the best.
Thank you.
Thank you. The next question is from the line of Vivek Rajamani from Morgan Stanley. Please go ahead.
Hi, sir. Congratulations on a good set of numbers. Just one question on the refrigerant gases. X of R32, if you could just touch upon the kind of pricing trends that you're seeing for the remaining products and how you see that evolving over the course of fiscal 26. Thank you.
Vivek, the way I would look at it is not X of R32. I think thematically what we've seen is HFC prices overall are higher. I think stable to higher is the trend that we will end up seeing during FY26 also, and that's the thematic. I can't give you gas by gas pricing because it will depend really on which market it is going, what kind of packaging it is going, the SKU wise positioning. So I don't kind of talk about that overall. But thematically, better prices is what we've seen in Q1, and hopefully that trend can continue.
Sure, sir. That's clear. And just one clarification from a domestic export mix, the 50-50 odd % number, which will be the same for this quarter, or has that mix changed? Purely on the ref gas side.
The HFC side, I think about 60% domestic, 40% export from a volumetric position.
Sure, sir. Thank you so much, and all the very best.
Thank you. The next question is from the line of Krishan Parwani from JM Financial. Please go ahead.
Yes. Hi, Rahulji. Congrats on a good set of numbers. Two from my side. First, in your opening remarks, you mentioned that registration and scale-up of one AI is expected in FY26. So what is the status of the rest 4 to 5 AIs? Would there be scale-up of any other AIs apart from the one that you mentioned in F26?
Yeah, again, the way we look at it, Krishan, is that there are 4 or 5 in let's say, commercial batching situation. Hopefully, because these are dependent on customer registration and customer positions on it, we don't know the exact timing of it, but likely to witness some traction in FY26 is what we are thinking about.
Got it. And secondly, just on this spectrum side, what would be your domestic specialty chemical sales as a percentage of overall spectrum sales? A rough range would be helpful.
Roughly speaking, I would say 60-40. 60 export, 40 domestic. But the point to make also is that even that 40 is at the behest of some global majors only.
Yeah. So earlier, I think that used to be 80 export, 20 domestic. So that mix has changed considerably.
At some point in time, it was probably 95 export, 5% domestic. So that situation is also kind of evolving over a period of time.
Got it. Thank you very much and wish you all the best for the future. Thank you.
Thank you.
Thank you. The next question is from the line of Kumar Saumya from Ambit Capital. Please go ahead.
Kumar, are you allowed to ask questions?
So just one question, sir. So just wanted to understand the domestic and export mix of R32. Last quarter it was 60-40 and now you said this quarter as well it was 60-40?
See, 60-40 was overall HFCs. For 32, I think it was probably in the range of, I don't know, I'll have to check. Give me a sec. 60-40 again. Huh? So roughly speaking, same, 60-40.
Okay. No, so I was of the view that domestic demand has been weak and we have pushed more volume in the export market. So this Q would have been different this quarter compared to the last quarter.
Again, I don't, so again, the fact is that generally speaking, in this quarter, we would expect a better domestic demand. But given the weakness in the RAC segment, that demand was weak. So we had to kind of find countermeasures from an export market perspective.
Got it. Thank you, sir. That will be all.
Thank you. The next question is from the line of Meet Vora from MK Global. Please go ahead.
Yeah, thanks for taking my question. Sir, first question was with respect to our 467A. Just want to understand what would be the current Indian market size and global market size. Is it sizable today or is this still getting as a development of probably replacement of R22 globally?
Again, very difficult to be able to give you the exact data on it. The fact is that this is a replacement for 22, right? And as the, let's say, secondary market or the trade market develops and this kind of becomes more available in the market, we will kind of find out. I don't have a sense of that right away.
Understood, sir. Second, sir, was more of a clarification. We have mentioned in the PPT that our EHF3 plant is getting stabilized. So is it now running at optimal capacity or the ramp up is yet to be seen?
The ramp up yet to be seen, but yeah, it is kind of getting there.
Okay, and just one last bit, with regards to HFC capacity utilization, we mentioned that we are now running at optimal capacity, right, in terms of all HFCs put together.
That was more on 32.
Okay. Understood, sir. Thanks. That's all from my side.
Got it.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
So thanks for taking the question. Sir, with respect to your comment around the quota regime in India for HFCs and the challenges that some of the other competitors may face in putting up larger capacities. Sir, what is the typical time for somebody to that will be the requirement somebody to put up capacities to meet the quota requirements?
Okay, so 24, 25, 26 are the measurement years, right? 27 being the free year. From a calendar year perspective, right? Somebody will have to look at capacity from the 3 years of production and maybe a certain position with respect to the 65% of 8, 9 or 9, 10 of the 22 or CFC capacity in terms of overall production. The other position on that also is with respect to how much you sold during that period, which is 24, 25, 26 as the overall position, which will become your baseline. So I think that is how it is going to play out, but again, each one to their own.
And sir, for our perspective, are we looking to put up any incremental capacities before the quota, the 26 period ends?
Not as of now. I don't think that is what we are looking at, and I don't think we have any plans around it. Because again, you have to understand the overall position on the quota regime. Capacity additions were only allowed till a certain point in time. Post that, they may not be considered for Montreal. And if you set up capacity by, let's say, close of 26, where will you sell that capacity? So you may have the production capability, but no consumption capability.
Got
Sorry guys, please go on.
Nitin sir, was that all your questions?
Yeah.
Okay, thank you. The next question is from the line of Rohit Nagraj from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity and congrats on good set of numbers. So just one question on the agrochemical intermediate capacity new capex that we have announced. So in terms of margins for the product, will it be in line with the company-wide specialty chemical margins? And allied question to that, in terms of the capacity, it seems a large capacity. So at any point in time in future, will it be fungible? I mean, you said it's a nameplate capacity though. So will it be fungible at any point in time? Thank you.
Okay, I have not understood the second question, but let me answer the first one. Where you are saying that are my margins similar to margin of some of the competition in this? Right, I'm not evaluate.
Sorry, not competition, but maybe our company-wide margins on the second business.
See, again, I don't give out breakup of the EBIT margin between chemicals, between fluorochemicals and specialty. So that's not what we do, Rohit. So not happening again.
Sure. The allied
second question was?
In terms of capacity, you said that it's a nameplate capacity. So we have taken probably... Right. The 12,000 tons capacity, it's a nameplate capacity, and we may reach that level or we may not, but we have taken approval. So at any point in time, if the capacity be fungible for any other products, or will it always be a dedicated product till the life cycle of the final AI?
And on a product mix, it will be dependent on a product mix of various products that can be produced. So yes, it will be to a certain extent fungible between products.
Yeah, that's all from my side. Thank you and all the best.
Thank you. The next question is from the line of Madhav from Fidelity. Please go ahead.
Hi sir, good afternoon. Just one question on the quota. When you said that 2024 to 2026 is the quota measurement period, if anyone is selling, let's say, instead of R32, if they're selling R125 in the domestic market in this period of 2024 to 2026, given that's an HFC as well, does that give you the ability to sell R32 if you're already selling 125?
Probably on the WP equivalent basis. Not probably, it will be on the WP equivalent basis. So if you are selling 125 in the domestic market, yes, you get the 3x multiplier on that. Correct. You can do 2 as well. The only point is that where is our 125 sales in India? It is largely an export product.
Okay. But 125 goes into some 410A consumption, right, in the country. So if you're selling
yes, but again, largely as the 125, it only goes to the export US market.
Okay. And so just a follow-up there that the HFC consumption of 2024 to 26, that gets added with the HCFC production you did in 2009 to 11, right? So it's a combination of these two, or it's either or, like this and that, or this or that. Like how does it work?
Two positions on this. There is one with respect to production capability and one with respect to sale capability. Okay. So there are two different things. And like I said, at the right point, we will set up a call along with Prashant to explain the entire nuance, the detailed nuance of this. So maybe that's the right point to ask that question.
Okay, perfect. Sounds good. Great. Thank you.
Thank you. The next question is from the line of Dhavan Shah from Alpha Accurate Advisors. Please go ahead.
Thanks for the opportunity, sir. So my question is on the R32. If we look at, the global capacity, it is always in the excess supply than the demand. So what gives us the confidence that the prices are likely to sustain? And secondly, I think iGas also came out with capacity in Middle East. So are you seeing any incremental volumes from there for R32? And do you foresee any other incremental capacity coming in the global market except the Indian players who have announced the expansion for R32?
Well, like I said earlier also, global capacity, you know better than I do, right? So I am unable to comment on the first one. In terms of pricing, in terms of overall position of 32, I think I answered that question in a previous question by someone, that we believe where current demand and supply situation is, pricing remains strong. So that's how I would really look at it. Being able to comment on detail whether the UAE plant is producing or not, or it is being, or is it selling, I think you know pretty much as much as I do. So I kind of pass that question.
Sure, sir. Okay. Thank you.
Thank you. The next question is from the line of Surya Narayan Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity, sir. Couple of clarification only. So this R32 price appreciation in the recent month, is it led by any production disruption by any large global producer? Because that is how it has been reported by a couple of global articles. So could you clarify?
To the best of my knowledge, I think it is a current demand and supply situation. Given where China is, given where overall position is, given the fact that there was a huge pre-quota filling that had happened in the US, there was a massive overstocking that happened. Again, when you think about it thematically, Surya, world needs more 32, right? And therefore, our capacity and maybe a couple of other capacities, we believe that they are in good shape, right? Given also the fact that some of the US blends use more R32 than, let's say, the HFOs. So overall, seems in good shape, but I don't see or I have not heard of any single disruption leading to capacity positions.
Okay. Second clarification, sir, about the agrochemical price or the specialty chemical pricing in the global market, what you have mentioned in the presentation. And you said that there is a kind of China-led pressure is anyway persists, and this is likely to the new norm going ahead. So given that, is it a kind of a cautious are you giving a kind of a cautious indication about the margin situation for our overall specialty chemical business going ahead, or how should one think about it?
I think that's the position that we've taken from an overall specialty chemicals business perspective. The way we are looking at the specialty chemicals business, and I've talked about it in the past as answer to a few questions in the earlier comments, that we still believe that growth is there. Right? Again, in some of the products, what we have said is we have been global leaders. We don't want to give up our position as global leaders in some of those products. It's probably more a product-based comment rather than a generic comment in terms of the overall margin profile of the specialty chemicals business. Okay. That's how I would really look at it, sir.
Okay. Just one point, sir, more. Here, in case of capex situation, see, in the FY25, we have done something like 1100 odd crore kind of capex. Obviously, a lower number, but again, we are commenting about 2,500 crore kind of capex for the current year. So this is a kind of the visibility, the demand situation, all that is giving a kind of positive indication, and last year was a cautious stance in terms of capex announcement and execution. What was this indicating really, sir?
I think you are reading too much into it. I think last year we had clearly said that the capex cycle that we are in, given the market situation also, we kind of said that we are not going, let's say, very large on CapEx. Today, what we are saying is we have kind of seen market improve, and therefore, our CapEx position is a function of how the market improvement has happened, and therefore taking the CapEx position upward than, let's say, when compared to FY25. FY25 was also here because when we think about FY24, there were large capitalizations that happened during that period of time, and therefore we wanted to digest some of that CapEx that had happened.
Sure, sir. Yeah. Thank you, sir. Wish you all the best.
Thank you. The next question is from the line of Aman Kumar from AK Securities. Please go ahead.
Sir, there is a significant rise in the price of BOPP films in the domestic market. So is this happening to the overseas market also?
I have not looked at export pricing, Aman, but you are right in terms of the BOPP, given the current demand and supply situation in the market.
So it is confined to India only. In the international market, margins are very much same. And sir, what about the BOPET? There is overcapacity in the BOPET market. So when we can think that this overcapacity gets over?
Look, I think the way we think about it from a BOPET perspective also, there is some change in the demand and supply situation there as well. Not many large new lines coming up globally on the BOPET side. So hopefully in the next few years, we should see some positive on that side as well.
So right now margins are better than last year?
Certainly.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Amit Agicha from HG Hava. Please go ahead.
Yeah, good afternoon, sir. Am I audible?
Yeah, you are. Please go ahead.
Yeah, thank you for the opportunity. Sir, what are your ROC targets post-commissioning of the new projects?
For which business?
For all the 4 businesses.
Yeah, again, that's not how we look at it. I think overall, when we think about ROC, IRR, and payback periods, each business has a different position, right? The specialty chemicals business are more, let's say, from an overall perspective, driven by positioning over a period of time, right? While when you think about the performance films and foils business, those are slightly more commoditized and therefore will have a slightly lower ROC target. Again, I think capital is not a constraint in that sense, and we continue to invest in more value-added products even on the packaging or the performance films business side. So I think overall targets remain in excess of 25%, more from a, let's say, the chemicals business, slightly lower, maybe 200 basis points from a packaging films business perspective on an overall long-term basis.
And the second question was connected to the debt. Like, what is the current debt levels and what is the company strategy?
Current debt levels?
Yes.
Debt levels?
Yes, debt.
Yeah, roughly speaking, about 3,400 crores was the overall net debt position. Again, debt is effectively a function of how much cash you have available. Given our current situation, we believe the overall number remains here or there or thereabouts, with plus minus 200 crores as the overall position, given where the capex cycle would be at that point in time.
Thank you, sir. All the best for the future.
Thank you.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to the management for closing comments.
Thank you, everyone. I hope we've been able to answer all of your questions. I wish that each one of you remains safe and healthy. If you have any further questions, we would be happy to be of assistance. We hope to have your valuable support on a continued basis as we move ahead. On behalf of the management, I once again thank you for taking the time to join us on this call. Thanks and bye-bye.
Thank you. On behalf of SRF Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.